are making decisions today, but we're always looking forward to the future, not only in years, but often cases, decades. It's more of that relationship aspect of it, not the
Welcome to the Live Greater View, a financial planning podcast produced by VLP Financial Advisors that discusses life, money, and perspective. We help clients live their best life at every stage through our VLP Live Greater partnership process. Thank you for tuning in. All right, well, great, Chris. Good to be back. We've got an interesting topic today, and one that we get a lot of questions on. I mean, this question seems to be coming up more lately than maybe we've seen in the past years. And what we're really going to focus on is, the advisor spectrum, what type of advisors are out there, how to differentiate and figure out what makes most sense for you. Because for clients, it could be one versus the other.
For sure. Yeah, there's all of these terms in our industry that we can easily see how you'd be confused if you're a consumer. You hear all of these ads either on the radio or on TV with all these different acronyms. And you're like, hey, how does this fit into the real world? So by no means do I think that, at least for myself, that I'm an expert on this stuff, but I can definitely speak from experience as far as like, hey, this is what matters.
Yep.
And this is not what matters. And some of the things that you hear may not be, what they seem from a marketing standpoint.
Yeah. And I think that's a good point, the marketing standpoint. There's a lot of information out there, and we know the internet is great, but there's a lot of misinformation out there also. So one of the big questions that we get is, are you a fiduciary?
Yeah.
So let's talk about how, what is a fiduciary, and then, how that works whenever you're working with a client, or again, how it works from the client's perspective.
For sure. Yeah. So just to set the table, a fiduciary is somebody who's legally and ethically obligated to act in your best interest. So when you're dealing with money and investments and obviously all of these things, there are clear paths to conflict of interest. And being a fiduciary is something that says, hey, you know what? You need to put all of your own interests aside, whether that's compensation, other arrangements, anything related to yourself. Put that aside and clearly only have the client's best interest in anything that you're recommending to them.
Yeah. So that's a really important piece, because especially when you work for a company, or let's say you're affiliated with a company that has their own proprietary funds.
Yep.
The concern is, is there a push to use their funds because of the compensation nature? So again, the fiduciary has to put all those aside and say, what is the best interest? What makes the most sense for this client? Prudent man rule. If I was going to invest this for this person, how, again, would I go back 5 years, 10 years? Would this still make sense?
Right.
So definitely, I think the fiduciary part, the suitability is the big picture thing. Is this suitable? Is it the right? And a lot of times we find that most clients want to work in that fiduciary status.
Definitely. And it's not just one bar, or one box that you have to check to be, hey, I'm a fiduciary. And what I mean by that, it's not pick something with the best performance or pick something that's the least expensive option. It's a combination of all of those things that you say, hey, I'm a prudent person. I have responsibility to look out for my client. This opinion, this avenue that we're going to go down takes into account all of those different things. And when we look at that, this is what's best for them when we check all of those other boxes. It's not just one thing.
In the fiduciary, typically you're going to get a lot more questions, right? You're going to ask a lot more questions because as a fiduciary, we got to understand the entire circumstances, the client's situation, their goals. So a lot of this time you're going to be doing planning, right? It's not just, hey, I want to buy this stock or I want to earn 15, 20%. It's, well, how's that fit into everything? So the fiduciary, again, when you're working with an advisor in that capacity, it's a lot more in depth, a lot more that goes into how they're going to work with you, what they're going to recommend, and what path you're going to go forward.
Right. And it all comes back to that long-term relationship. That's obviously our approach to business is, hey, our average client, 10 years, 10 plus years. We are making decisions today, but we're always looking forward to the future, not only in years, but often cases, decades. It's more of that relationship aspect of it, not the transaction.
Right.
There's different parts of our industry are still, focus on transaction. And that's, there's a whole different, conversation to be had there, but it mainly comes back to, hey, we're in an advisory relationship that focuses on the long-term. I'm working with a fiduciary and I know that I'm comfortable with this person. They have my best interest in mind.
So that was a good point. You're talking, you brought up advice and then transactional. So let's segue into another piece, which is commission versus the fee-based advisor. So on the commission side, that's that transactional, right? You have a need, you came in, they sell you a product. And that's what it is. They're selling you a product, whether it's an annuity, a mutual fund, something that in that transaction, their liability, all they have to show is that that was the best interest at that time, just for that specific product. There's not, hey, is this going to be the best thing 5-10 years for you? And it may be. I'm not saying that, these products are sold without that thought in mind. But sometimes, typically what you're going to see in that commission based is, hey, here's this product at the time when we did this, we sold this, this was a good fit. It was in the best interest of the client at the time. It doesn't have that forward advisory relationship, that advice, the looking forward versus the fee based.
Right.
So
Right.
why don't you talk a little bit about the fee-based side?
Yeah. And when you think about the fee-based side, I'd say, you know what, the way that we're compensated is not based on commission. It's not based on transaction or us being influenced to use any sort of product. That has nothing to do with it. On the fee-based side, it's purely, for the term that is used often in our industry is we do better when you do better, as in when a client's portfolio goes up, our firm does better because we're compensated based on a percentage of assets. And then when we're, in a bear market and clients' assets are taking it on the chin, which will, naturally happen as markets fluctuate over time, we take it on the chin also. So we're really on the same side of the table with clients. Whereas with commission-based products, that's not necessarily the case. Yeah. If the market goes up, you make a commission. The market goes down, you make a commission. It's really all dependent on transactions. Something that I think is very important to talk about as it relates to fiduciaries is there are fiduciaries across this entire complex of our business.
Yes.
They are not unique to one company, one firm, or any sort of avenue. There are firms out there that do a really great job of marketing, particularly on the radio, national firms that say, hey, we are fiduciaries, and they really make it sound like it's unique to just their company. Whereas, what we're talking about, obviously today, us being fiduciaries too, that is not the case.
Right. It's an industry, and it depends on where you fit into that industry, right? It depends on what aspect, where you see, you're doing the advice, the commission based. And that's a very good point, because there is a lot of misinformation out there on, yes, I'm a fiduciary. Everybody says, oh, that's great. I want to work with a fiduciary. This company is a fiduciary. But we know, you can read any headline, you can Google anything. Sometimes some people at those companies who should be fiduciaries don't act like fiduciaries, and vice versa. Those people who maybe aren't fiduciaries, who are doing commission-based or best interest, they actually act like fiduciaries. So it does come down to that trust, right? It comes down to what we think is really important is finding the right fit for you, your family, and that company, that trust that you can build, and also just, again, there's lots of different ways to do what we do, and just finding the right fit for you and your family.
And this topic that we're, obviously spending time on, because it has come up, over the years, we'll typically address it at the onset of a relationship. We'll make sure that, that potential client knows how all of this stuff fits in, knows how we work. If it keeps coming up and it's something that they want to go deeper and deeper into, we just say, hey, let's take a step back here and really hash this out, because what they're focusing on at that point, in our opinion, tends to be less important than all of the other things like you just alluded to, as far as the relationship, the fit of the firm, all of these things that are actually going to move the needle, not the stuff that's buried in some of the legal parts of our business.
So let's talk about the different ways you can do this, right? Because there isn't just one way to be a fiduciary. A lot of people associate fiduciary as being with a registered investment advisor. Maybe you're not associated with a broker dealer. Maybe there's a lot of terms out there: independent, registered investment advisor. So let's talk about that. So advisory firms can be built different ways, right? So you can build one where you're just an RIA. So let's talk a little about the RIA structure.
Yeah. So when we think about that structure in general, there's really three, important pieces that fit into most advisory firms. The first one is going to be the advisory firm themselves. The second one's going to be, in some cases, a broker dealer. And the third's going to be a custodian. So, when we think about those three big pieces, the advisory firm, that can really look as a standalone independent like ours, who is affiliated with the broker dealer, or it can also look like a registered investment advisor who is not affiliated with any sort of broker dealer. But that advisory firm, regardless of whether it's a registered investment advisor, or RIA is an acronym, or a firm like ours is a separate standalone entity from anything else that they are associated with.
Yeah, and I think that's the big misnomer and the miscommunication. So for us, for example, we're not a standalone RIA. We are actually using our broker-dealer's RIA.
Mm-hmm.
We're still RIA, but instead of us going up and setting up our own RIA, having to do our own compliance, go out there, we utilize the power and the resources that Cetera can provide, and we can be able to be a partner with. So we don't have to focus on that. They can help us make sure that we're following the letter of the rule. When new rules come down, when the SEC makes adjustments or changes, they can help us interpret that. They can help us think through it. An RIA doesn't have necessarily that. A lot of interesting thing though, a lot of RIAs do outsource that piece. So instead of being associated with a broker dealer, maybe they'll outsource. So it kind of looks the same, talks the same, but again, the structure is a little bit different because your RIA may be the name of your company. Yeah. That could be how it's set up, where, for us, for VLP, we're utilizing our broker dealer's RIA. And Virginia is a little different. There's 2 states in the union that only allow you to have one RIA. We just happen to live in one. So that happened. Yep. Virginia and North Carolina are the 2 states out of all of the United States that require you only have one RIA.
Yep. And, we're obviously independent. RIAs are independent. That is different than wirehouses or some of the bigger, bank brands that you see out there. So it seems like some of the questions that, we just addressed come up more unique to the independent space versus some of the bigger wirehouse and bigger banks.
Yeah. And that's a big difference to point out. So those big banks, big wirehouses, those advisors don't own their company. They're not independent. They work for Merrill. They work for those specific companies where, we own VLP. VLP could go and become VLP IRA if we want. We could leave our broker dealer, pick a new one, or again, just go out and set up our own shingle. But that's something that, again, is a business decision. We like having the access and the resources to what Cetera brings to the table because we do find that it adds value for our clients.
For sure. And, we talked about the broker-dealer piece potentially and how that looks. The other, third leg of the stool, if you will, is the custodian.
Yep.
So this is something that's really important and really, essentially what the custodian is the actual entity that holds the client assets. Mm-hmm. Let's talk about how that looks and feels for our firm versus RIAs and some of these other, types that we're talking about.
Yeah, so we use Pershing. That's Cetera's relationship. Because of our relationship and using Cetera's RIA, we do use their custodian. Mm-hmm. So that currently today is Pershing. We actually could change custodians. Cetera has opened that door to allow us to use other custodians. Something we'll continue to explore. If you're your own RIA, you have to go set up those agreements with those custodians. Right. And it could be several. They could have clients on a Schwab custodian. They could use Fidelity. They could use Pershing. So the interesting thing is there are some custodians, there are some RIAs that are just going directly to Pershing, not having that Cetera connection, for example. So again, that custodian, when you think about the independent RIA, they still have someone custodian the assets, sure. And typically it's not them. We won't mention some names of some RIAs who used to custody their assets that may be in jail. But, so again, it's important to understand what that relationship is and what protection that gives you. Yeah. I think having an independent custodian is a good thing. It's somebody else who is verifying the assets. They're making sure that, they're tracking the transactions. You're not worried about the company you hire to not only give you the advice, be the fiduciary, do all the other pieces of your financial aspects and make sure that the transactions are clearing properly.
For sure. Yeah. You just want to make sure that like you said, that's independent, that's being verified. Some of the black eyes that our industry has gotten over the years has really come from that, where they're not using a custodian. They're doing all of that stuff in-house. They're holding the assets, performance reviews. And that's how, some really, terrible things have happened over the years in our industry, especially around the financial crisis. So that's really, really important. Pershing's one of the largest custodians out there. They have scale, and everything that we could ever want from a custodian.
And that's important. Scale is important. When you're doing as many transactions a day as Cetera, Pershing is doing, you want someone who has the scale and capacity to do those right, do it correctly, and provide your statements accurately. So that's really important. When you have these smaller self-clearing broker dealers or custodians, that's a concern. Can they, what can they do differently that they can't do at a scale size? And that's important. So that's, again, to your point, where we've seen some issues in the industry, and certainly in times when we have volatility in the market. You want a partner who's strong, has a clear understanding of how the industry works, and going to make sure your assets are where they should be.
For sure.
So, Chris, let's wrap up by talking about how the relationship with the client really dictates whether you're a fiduciary or not. We talked about that transactional versus the advisory, and really from the VLP standpoint where we put ourselves.
Yeah, I think that this is really the clearest cut way for consumers to know what type of relationship they're in is, hey, you know what are we working on? Are we working on a transactional, on a commission basis, or are you working on a fee basis? That is the most clear-cut way to say, well, I am working with the fiduciary because in that context, I'm working on a fee basis. There are certain instances where firms can either wear a transactional-based hat, and under that engagement, they could be working on commission basis, and that may make sense for that situation. Or oftentimes, they could also be working on a fee basis. So I think that's the clearest cut way to determine how a client is engaged with the firm.
Yeah, and I think it comes down to, it's again that transactional versus, do you want in a relationship of advice going forward? Because that's really where you're going to see more of that fiduciary standard be held. And here when we look at VLP, where majority of all of our advisors are certified financial planners, practitioners, we're CFPs. And not only, the fiduciary standard that we're held at by just being associated with the SEC, having our licensing there, but you have a whole separate code of ethics for the CFP. We're held to a higher standard. There is, every year we've got to do our continuing education. We've got an ethics course we have to do every 2 years for a renewal. So again, it's that extra level to say, we're aligning with our clients. We're going to sit on the same side of the table. Our goal is to get you to where you want to go, and do that driven through advice. And also, not only just the advice, but making sure that we're doing things that's in the best interest for the client all the time.
Definitely. And from an industry perspective, there's over 300,000, quote unquote advisors nationwide. About 100,000 of them have their CFP.
Yep.
So it really is that sort of elite group that says, hey, you know what? In this industry, but I want to take that next step because I feel like the continuing education part is important in all of those different things, and I want to hold myself to that higher standard. So just wanted to share that number to give that a little bit of context.
Yeah, and I think that's important. I think, here at VLP, our goal is to put ourselves on the same side, be that trusted partner. We want that long-term relationship. You referenced our average client, term that we have with clients. It's 10, 15 years plus. Some of us older than some. But again, it's that whole thing about the relationships, having that advice. Our goal is to make sure our clients get to where they want to go. And, we find that fiduciary and the advice-driven side of the business helps us do that.
Yeah. And, as we wrap up, I think, this will hopefully shed some light on, some of these terms and how some of these pieces fit together. I would also, just share that if you hear something, you read something, you say, hey, I need to bounce this off of somebody in the industry, that's what I would recommend. Because again, companies have gotten to be really good at marketing and taking and positioning some of these things, obviously for their own benefit. I think that it would make sense to bounce some of that stuff off of somebody who's actually in the industry to give it some context.
Yeah, absolutely. And I think it's also good, again, find somebody you trust, and you think is the right fit for you and your family, because that's going to make the big difference for the long run.
Great.
Yeah.
Well, thank you, Rose, for that. Hopefully that's helpful to some of our listeners. And as always, thank you for joining us here on the Live Greater View podcast. If you found this to be useful, please pass this along to friends and family.
Thank you. Thank you for listening to this episode of the Live Greater View. If you like what you heard, please subscribe to our podcast on iTunes or Spotify and recommend our podcast to family and friends. To learn more about VLP Financial Advisors, please check out our website at vlpfa.com. Thanks again.
And now for our necessary disclosures. Securities and advisor services offered through Cetera Advisor Networks, LLC, member FINRA SIPC, a broker-dealer and registered investment advisor. All investing involves risk, including the possible loss of principal. There is no assurance that any investment strategy will be successful. The views stated in this podcast are not necessarily the opinion of Cetera Advisor Networks, LLC, and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned. Due to the volatility with the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable. However, their accuracy or completeness cannot be guaranteed. Past performance does not guarantee future results.